Okay. Cool. Oh, okay. I know it. Wait. All right. So this is we're just gonna recap today's trades and recap uh the psychology behind the trades. So as always, our only trade, SPY, and we doing same day zero DTE contracts with SPY. Um this is a small account. The goal every day is just to make 5% of whatever your account balance is. So that was the goal for the day was 5%, which at the time my 5% would have only been like $65. It's a small account. So this is your day trading. Of course, if you could have more money, great. But if you only had $1,000, 1,200, that's fine too. You just start from where you're at, but you just take longer to get the bigger amounts. And if you got a goal every day, if you set a goal of 5%, it's easy to achieve that. And 5%, you can compound your account pretty quick and really go ahead and make it happen. So that's the challenge for me. I'm doing kind of a challenge, and I want to go ahead and see if I could do that. So we started with 1,000. Currently, after today, I'm up to 1,336, and um, that just came in the course of like a week. And so we working at getting it done and pushing this to maybe 5,000 to 10,000. That's the goal. Maybe 10,000 in the course of a couple few months. So that's the goal. But anyways, we're gonna talk about what the setup was today, where I took my trades, and talk about basically why I have my own way, my own system, my own style of trading that's been working for me for a while. So I just kind of stick with that. And I did make some tweaks to my trading game that has definitely improved the game. So we'll go over that. So basically, right now we're looking at SPY, and you can see my chart. Now, today, I'm gonna go back and do this. Let's do this. Let's set it up. Let's set it up. So, for one thing, let's look at the daily part of SPY. In order to know what direction you want to go, whether you want to go and say that we're selling today, or if you think that you're going to be going with the buyers today, you need to know what the trend is, and you need to know your price action levels. You need to know where price reacted, whether it shot bounced up or if it caved down. So that's my way of automatically knowing, okay, these things are liable to happen. And I can base my trading bias based off of what other investors' bias is. The big investors, the big money. I could base my bias based off of what their bias is because I want to follow the money. Uh, and when I trade, I want to follow the money. So I'm just waiting on my computer to set this up where I could go ahead and show you the psychology behind it. To take it so reload it. All right. Oh, zoom this all the way out to really get an idea of where the other trade box go. Because I know I didn't discard. Yeah, maybe I did. All right. So overall, all through since last year, what you got is just an overall huge bullish trend. If you look at the overall daily picture and go to the weekly picture, you see an overall bull trend overall. And SPY has hit all-time highs. SPY keeps creating new all-time highs. So the trend is that SPY is very bullish. So do that mean that every play is going to be a bull play? No, because there's certain levels that end up becoming a bear play too once you get to certain levels. But the majority of your plays, you're gonna have more bull plays than bear plays because we on a been on a bullish trend. Now, if you look through the weeks, I'm on the weekly chart right now. So each candle represents a week of trading, a whole week. So this is a pretty consistent outlook. If you think about it, this is where price ended up after a whole week of trading. So if you look at this, these last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks, we've been consolidating between the low range. If you look at where these wicks went and ended up bouncing off of, this is the low where we've been at around 675, 880. That's the low on the weekly. That's why I put this green dotted lines in here. I put this here because it represents where we would buy at. This is a buy level. That's why it's green. The red levels represent these red dotted lines represent red. They represent selling. This is where sellers came in and where the sellers sold. And once price gets to that level, that's where sellers like to sell. So what I would do is once price got to this level, I'm going to look to sell too. Because even though this is a bullish trend, at this price level, this is where sellers want to sell. And I want to follow the money. This is where buyers like to buy. I want to follow the money. So that is where I would buy at. Now, let's go to the daily. On the daily chart, this is today's candle. See, the 17th of February, 2026. So this is today's candle. And this is where price actually got down to the 675 level. And once it did, this is where you would have wanted to buy. Because what happened? Price went straight back up once it touched that level. That's where the buyers wanted to buy at. Now, this is what happened today for me. I got into it. So I'm a day trader. And I trade on a lower level because I don't want to be in all day on a trade. So for me, I want to take my trade. My trade will last maybe 10 minutes tops, and then I'm done. And I might do two trades in the day and be done to hit my goal. My goal is 5% or whatever my account value is. So today, my goal was to hit for at least $65, and then I'm done. And you got to learn to leave once you get that $65 or whatever your goal is. That's the part you have to learn how to leave. Okay, so because I'm a day trader, because I trade on a lower time frame, I take it all the way to the 5 minute. As you can see, I trade on the 5 minute or the 1 minute. I trade on the 5 minute or the 1 minute. Generally, I'll just trade on the 5 minute. I'll see what's happening on the daily first, see where we're at, what levels we're at on the daily. And then from there, I'm gonna go to the 5 minute and I'm gonna mark up some levels there. And from there, that's where we'll go from. So today, for instance, this is today's. Let me go to today's opening candle. And why did I move this? Damn. Right here. There we go. Yep. All right. Today, this was the opening candle. Go ahead and make it bigger. Today, this was the opening candle. This was at 9:30. So my technique, price opened up at 680. Now, in the morning, I'm already in the market at 9 o'clock. I'm in the charts. I'm on my chart. So at 9 a.m. up here at the top, you'll see where it say SPY, and it'll say pre-market. This is aftermarket right now, but because the market is closed, of course. But in the morning before the market opens, there's still orders and stuff being taken, and buy orders and sell orders. So price is still actually moving in the morning before the market opens. So at 9 a.m., you'll see where it says pre-market. And it say it right here, and it'll tell you what price is at in the pre-market. During when I see that, what I do from that point, I go ahead and start marking on the chart. I might put a line where price is at. So at this morning, price was at 680, for instance. We'll say it was actually at 680,000. So I just call it 680 balls. So let's just say I put that golden line, and then right here, 680 balls. Boom. So that line is right there. So price was opening up right around here. It actually opened up like right here. It opened up a little higher than 680. Opened up right here. So we'll just say right there. 683.30. We'll say 683.30. Price opened up. Now, if I go to the daily, this is what I saw. This is the daily. These is my levels. This was a support level right here. This is what I saw. Now, price, like I say, price was opened up here, right? I was like, this level is still gonna come down and retest this support. It already was looking like it wanted to come down and retest this support. It was a good chance for it. But in the morning, when price opened up, it opened up with that big bullish candle, as you can see. When price opened up, this 930, this was the candle that it opened up with. I did not get in at this candle. I said, well, I'm a I'm gonna wait until the next candle. Actually, what I said was, if price breaks this previous high, which was Friday, it opened up right here. Now, if it break this, then I'm gonna go in, because if it usually when it breaks the previous high, you're gonna have a little bit of a run. Now, I'm glad that I went in and hurried up and put a stop loss in really quick. Look, there it was right there. We said if price break this, then I'm gonna go in. Once price broke this, I bought a call. Okay. We ran the call up, and at that, and I put in a stop loss. The call went up. I was in profit. So this is the importance of hurrying up. And when you get into a certain amount of profit, hurry up and put a stop loss in, first of all. Hurry up. My stop loss is always 35% of my investment. So if I invested, what was my order? How much was this order? Go to my orders. This is how you know what you did. Your orders, your field orders. So this is today, the 17th. This is the first order. I bought it at 291. It tell you your limit price. Limit price was 291. I ended up selling it at 300. Actually, my limit price was 279. This is like let me see. Let me show you. See. Yeah, no. When you look at it on your phone, that's where you'll really get the actual real limit price. But even still, I got it at the limit price of 279. So your initial investment is $279, because you got to remember these are option contracts. So $2.79 times 100 is $279. So that's what your initial premium. That's the called the premium. That's what your initial investment is. Now your stop loss is 35% of that. So you go ahead and do your math on that. The way I do it is whatever you feel that limit, whatever the limit price was when you got it, when the order filled, the actual limit price, because I got my limit price way lower than that. Mine was 279 for my limit price. Where it actually filled at. It filled at 279. So with it filling at 279, you would do 279 times 0.65. And whatever that is, that's what you will put in for you will input that in for your stop loss order. That way you only, if it do go the wrong way and it don't go your way at all, you only losing 35% of your initial upfront. Okay. So you're not going to, it gives you more room to play, so you don't blow your whole account in a couple trades, and you always want to use a stop loss. Always. You don't never want to not use one. So that's just rule number one. Always use a stop loss. Always keep it about 35% and don't stray from it. It's okay to take a loss if you got to take a loss, but you don't want to lose your whole account. So, of course, I put my play in. I put in a stop loss, 35%. Now, my rule is once I get into profit, up about 15% or 10 to 15%, I want to make sure that I hold all as much profit as I can. I don't want to go into the red at all. Once I go into the green and I'm up in the green a little bit, because I want to give myself a little room to play. I don't want to make it too tight. But once I go in the green about 10%, I modify the stop loss. And I do it right here from my phone. It's a lot easier when you modify the stop loss from your phone. So I modify the stop loss from my phone because it's easier for me. Let me see. What? Modify that. Let me see. Boom. Yeah. See. Yeah. Through the phone, it's a lot easier to modify the orders from the bottom, and you could watch it. You could actually watch the tickers and the order, the prices changing, and you could change yours to adjust it to where, okay, it's going up, it's up now. I bought it at 279. Now it's up to 300. So I'm $20 in. I want to make sure I hold that. And if it got to like, it actually got higher than 300, it got to 315 or so. And then I put in a stop loss where I was like, I modified my stop loss. So I made sure I was in. I was like, okay, it got to like 315. And I ain't want to make it too tight. I wanted to make sure I was in profit, but I didn't want to get stopped out right away. I was trying to see how long it would run. So I set a stop loss at 300. I modified it to 300 and it pulled back right here. Bow. I got this. I got this run. And then right off the pullback, bow, it put me out. And which, long as I'm in the green, I'm fine with that. Okay. Okay, so I only had a $21 profit before it pulled me out. Bet. Now let's readjust. Let's readjust. So once I seen the pullback and it happened here and it dropped me out, you got to wait for the confirmation, of course. Once I saw this huge engulfing bearish candle, I was like, okay, here we go. I looked back to the daily and then I said, okay, this is where we're going to see this bad boy go down and retest that level because I knew he was going to do that anyway, just based off of this price action that we got going on. We done seen this happen. It done happened a few times. You see, this is that price action. So because I seen that price action playing out, I was like, yeah, that's what it's gonna do. It's gonna be a bear day, or for the most part, a bear day, because we're gonna see this bad boy go all the way down. And I ain't know if it was gonna break it or not, but I felt it was gonna definitely go down to that price level that I already mapped out of 675, 880. So I went on and played with what the invest with the big dogs doing. And when I seen that, I said, you know what? Let's put in a put play. So I put in a put play. When I seen it get to here, I'm saying I'm gonna drop it on the next candle. Bam, next candle. This is where I got in at. I got in right here. And as you can see, you had to play out boom, boom, boom. And this one was worth the first one was a $21 profit. I got stopped out. Second one was worth 100. So that was uh a full day, 121 day. Goal today was 65. So I went, over the goal. Um, almost doubled up. That was exactly what I was, looking for. But I wasn't looking to double up. I was looking for 65. But the play that I was looking for, this is exactly how I knew it would run. And it just comes from setting up your price action levels, setting up your levels, and understanding your ranges, how these prices range in a day. Like your range is the highest it'll go into the lowest that it'll go. Like right now, it's some new levels, and then not only that, the biggest problem with me is once I made my profit, closing the computer and not looking at the chart anymore till the market is over. That's one of my biggest hardest parts is just not being greedy, not being arrogant and thinking that you can always beat the market because you can't. You definitely can't. So um that's one of my biggest problems is just learning to not be greedy. Uh don't get arrogant about it. Don't, this is it's a business and you have to treat it as a business. Once you're done trading, you always journalize your trades. I had my trade. Well, I did journalize it. So let's go to that too, just to show. Boom. So, yep. No matter what, I always journalize my trades in a spreadsheet. Uh, you keep up with this. This is a business. So this is the way that if you're gonna be serious about a day trading or really trying to compound your account, things like that, you got to treat it like a business. And so you do have to track your trades at all times and track your progress at all times, the good and the bad, because you're gonna see I got losses in here too. So it's not like it's all peaches and cream. You're gonna have losses and setbacks along the way, but you keep your losses to a minimum and your wins are going to definitely outdo the losses. I had one big loss in a long time for when it comes to this type of account. You know, a $90 loss is huge. You know what I mean? On a small $1,000 account, that's huge. So that's one huge loss. But then you see the most of my losses. Then I had another one that was big, $47 loss, but that was a 35% loss. So that wasn't that bad. That was it hit my stop loss. That's the rules. So you got rules, it's all good. You know what I mean? It's all good when you got rules to this. And I follow the rules. So 35% hit my stop loss. Um, other than that though, what you pretty much seeing is uh progress. Progress. That's pretty much what you want to see is progress, and I treat that like a business. I keep it on there. I keep it pinned up there, and I took my two trades. I got my six, well over my 5% today, almost doubled up, and I got out. That's the hardest part, just leaving and then coming back tomorrow and doing it again. So that was the recap for the day. Make it easy peasy, Japanesey. and we coming back tomorrow, and it's gonna do the same type of thing. 9 a.m. I'll be in here. I'll be checking pre-market. I'll be looking at what's going on pre-market, and I'll go ahead and map out some levels. You know what I'm saying, and make it easy for me. This is just how you just make stuff easy when you do it on the system. You get in, you go ahead, you map your levels out, you watch it, and then you look at where what has been happening, what the trend is looking like, what's been happening over the course. That's why I go to the daily, because you don't want to be blinded by just these low time frame charts, 5 minute charts and 1 minute charts. You don't want to be blinded by just that. They's got other levels in between levels. So you don't want to get blindsided by the levels in between. You want to get a bigger picture. So you want to go to your daily first, and you want to go to your weekly first, so you can get a big picture as to what's going on. You know, that's most important. Put this right up in here because that was on today's. And since I already did these, I'm taking them out to hell with it. Cause once you already done put it into your sheets journal, you could take the notes off. I use the notes once I'm finished with the trade. I make a text note. I make a text note where where I did the trade at. So when I opened up today, for instance, oops, that's that 9:30 candle. Yup. My first candle, for instance, I'll put a note right here. Cause this is where I got in at. Like right there. And then I got a template what all the things you inputting in there. Boom. I already set up a template. So I'll just set that up. And then I'll type in everything here, like what I did to set up. It was a call, range breakout. Cause anytime when it's certain things that happening, right? When you got a candle and it just opened up and the market just opened up, that first breakout, that's what I call a range breakout. So I just say RBO, you know. And what type of play it was? It was a call play, RBO. Because you could have a put RBO. And you put in what your entry was. My entry on that one was 279. And then what was my exit? My exit was 300. And then I'll even put in $21 profit. You know, my target, I wanted to get more out of this. My target, honestly, is always 35. I always want to do at least 35 because my loss is 35%. So my gain is always going to be 35% too. So let's see. So I would do 279 plus 35 for that automatically. So that would be what, 314. All right. One, that's a W. It was a W. Anything that's over $1 is a W. So dollar and up profit is a W. So it was a W, but I got stopped out too early. That's what happened. Nah, and then I got a line for mistake and lesson. And that's the big part, the mistake and the lesson, because um modified stop loss. Mm, mm, I don't know. I could have got out at market. Cause it actually had got to like $30, and then I tried to get greedy and just modify the stop loss. Maybe that was the mistake. Yeah. Oh, OCD. Oops. Hmm. There we go. Bam. And then I like painted green. Green is for the win. Green is for the win. Yeah. So yeah. And then and then I had another one here where I put one there too. I had another one there, and but I've already journalized it in my actual journal, which is in sheets. And so, once I've done journalized it in the sheets journal, I'll usually just go ahead, keep delete these off of here. But for the sake of this, I'm gonna put it in there, type in the parameters of what I did, because hey, it's important. It's important to be repetitive and do these things. That's how you become good at it. This was a put RBO. Well, yeah. Now the entry on this one was, I'm gonna go on my phone because it doesn't really do it right. 225. Where did I sell it at? 325. $100 profit. Target is always what? 35. So that was what, 260? Yeah. Well, that's my lesson right there. I need to let these winners run longer. I'm getting out too fast because it ain't too fast for me. I took it to right where I really wanted it. I seen it right here. I knew I could have took squeezed all of this out and probably took it for a whole another maybe 60 to another 100. I could have took it all the way down, and actually even off of the bounce, I could have ran it and held it. That would have only held me to 1035. If I'd have used if I'd have used this price indicator as the straight up, I wanted to get all the way there and I'm gone. Oh, I could have took this all the way down. All the way down. But I'm just like, hey, you get your 5% on your account and you're done. You don't need to do more. And I had got well over my 5% and I got out of there. But in hindsight, I see where, hey, these could have I could have let it go even longer and let it get to the price that I knew price was trying to get to. But that's okay. You live and you learn. And when once you get done and you get yours, the hard part is getting out and leaving. Because I knew what price was gonna do when it got here too. And I could have ran this. I could have took that right on back. But that's my problem. Is being greedy. And that's why I have to that's where I get out when I do, because I want to not be greedy. So that's what happens. That was the trades for the day. That is what we did today. I'll be back tomorrow. We're gonna do it again and again. But the game is getting your 5%, compounding, slowly compounding, building up, because you just don't know how fast or